If you are collecting Social Security right now, I need you to put down whatever else you are doing and stay with me for the next few minutes, because 3 separate money changes are landing on seniors this July, and every one of them touches money that is already yours. One of them can stop your monthly payment from arriving at all if you do nothing. One of them can hand you back $6,000 at tax time that most people will never claim because they have never heard of it. And one of them puts a hard ceiling on what you will ever pay for your prescriptions again, but only if you know the program that unlocks it. These are not things that might help you someday. These are real dollars with real deadlines attached to your check, your refund, and your medicine right now in 2026. And here is the part that worries me as an attorney. Most of the seniors I talk to have either heard nothing about these 3, or they have heard a headline without ever learning the one specific move that actually captures the benefit. A headline does not put money in your account. The form does, the phone call does, the program does. So that is exactly what I am going to give you today. All 3 changes in plain English with the precise action for each one. I'm Walter Barron. I'm a state bar licensed to state attorney, and for more than 15 years I have sat across the table from families, helping them protect their homes, their savings, and the money the government already owes them. I read the fine print on these rules so you do not have to, and I'm going to walk you through all 3 of these the way I would walk my own parents through them. And before you decide any of this is not for you, stay with me whether you are 62 or 82. Whether you are still working part-time or fully retired, because at least one of these 3 is going to apply to you or to someone you love. And the one you assume does not matter is very often the one that matters most. Do me one quick favor before we start, because it genuinely helps this information reach more seniors who need it. Hit that like button, and if you want the rest of these breakdowns, subscribe. It costs you nothing, and it is the only way the people who need this ever see it. So, let me lay the 3 out for you up front so you know exactly where we are going. And then we are going to take them one at a time and go deep. The first change is happening to the payment itself, the way your Social Security actually reaches you. And if you are one of the people this affects and you ignore it, your check can simply stop. The second change is a brand new deduction written into federal tax law that can shield thousands of dollars of your income from the IRS, money that comes straight back to you. And there is a strict cutoff on who gets the full amount. The third change is a new cap on what you pay out of pocket for prescription drugs, a number that once you hit it means you pay nothing more for your covered medicine for the rest of the year. 3 changes: your deposit, your refund, your prescriptions. Now, before we dive in, let me answer the question you might already be asking, which is, Walter, if these are so important, why have I not heard about any of them? And the honest answer is, the whole reason I make these videos. These changes do not arrive with a phone call to your house. They show up as a single line buried in a 1,000-page bill, or a notice posted on a government website written in language nobody reads, or a rule that takes effect quietly while the news is busy with everything else. Nobody is knocking on your door to make sure you claimed your $6,000 or switched your payment in time. The system simply assumes you will figure it out on your own, and when you do not, it keeps the money, or it lets the deadline slide right past you. That is not an accident. That is just how it works. And the only defense any of us has is knowing. So, let us make sure you know. Let us start with the one that is the most urgent, because this one has a clock on it. The first change is this. The federal government is ending paper checks for Social Security and moving every single beneficiary to electronic payments. If you are someone who still gets a paper Social Security check in the mail, this is the most important thing you will hear today, because the window to act is closing, and if you do nothing, you are looking at a real risk that your payment does not show up. Let me explain exactly what happened, because this is not a rumor and it is not a maybe. There is an executive order, Executive Order 14,247, signed in March of 2025, and it directs the federal government to modernize the way it pays people and to phase out paper checks for federal benefits. The Social Security Administration began that transition, and the date they pointed to was September 30th of 2025, with the goal of completing the move away from paper entirely by the end of 2026. In plain terms, the paper check is going away, and they are not asking. They are transitioning everyone to electronic payment. Now, who does this actually touch? If your Social Security already comes by direct deposit into your bank account, you can take a breath because you are already done. Nothing changes for you. The money lands the same way it always has. But if you are still receiving a paper check or you know someone who is, this is the moment to act because once the paper check stops, a payment that has nowhere electronic to go is a payment that does not reach you. And I want you to think about who is most likely to still be on paper checks. It is very often the oldest seniors, the ones who have done it the same way for 40 years, the ones who do not bank online, the exact people who can least afford a missed payment. That is who this rule can hurt if they do not hear about it, and that is why I need you to share this one. So here is your action, and it is simple. You have 2 clean ways to receive your money electronically. The first is standard direct deposit, straight into your checking or savings account, which you can set up through your bank or through your My Social Security account online. The second, and this is the one a lot of people do not know about, is something called the Direct Express card. The Direct Express card is a prepaid debit card the government loads your benefit onto every month, and it exists specifically for people who do not have a traditional bank account. So even if you have never had a bank account in your life, you are not stuck. There is a path for you, and your benefit can ride on that card. Let me walk you through the actual steps so this is not vague. If you want standard direct deposit, you need 3 things in front of you: your bank account number, your bank's routing number, both of which are printed at the bottom of any check or available from your bank, and your own Social Security information. You can set it up the easy way by creating a free My Social Security account on the Social Security website and entering your bank details there. Or you can simply call Social Security or walk into your local bank and ask them to help you set up direct deposit of your benefit, and they do this every day. If instead you want the Direct Express card because you do not have a bank account, you can request that card through the Direct Express program. And once you have it, your payment loads onto it automatically each month, and you use it like any other debit card at the store, at the ATM, anywhere. The point is, there is a path for every single person watching, and none of it is complicated. The only wrong move here is to do nothing and hope the paper check keeps coming, because that is the one thing that is not going to happen. And let me get ahead of the one objection I always hear, which is, Walter, I do not trust direct deposit. I like my paper check. I can hold it in my hand. I understand that feeling completely, but here are the cold facts. A paper check is roughly 16 times more likely to be lost, stolen, altered, or returned than an electronic payment. Mail theft of benefit checks is a real and growing crime against seniors. Electronic payment is not the risky option here. The paper check is the risky option. And the government is closing that door precisely because of how often those checks get stolen out of mailboxes. Let me make that real for you because I have seen it happen to families I have worked with. A check goes into a mailbox in a quiet neighborhood. Someone fishes it out, washes off the ink, and cashes it. And now an 80-year-old widow is on the phone with the government trying to prove that she never received her own money, waiting weeks for a replacement while the rent is due and the pantry is getting thin. That is the exact nightmare this change is built to end. When your money lands electronically, there is no piece of paper sitting in a metal box on the street for anyone to grab. It is simply there, in your account, on the same morning every single month, like clockwork, and nobody can intercept it on the way. There is also a plain cost reason the government is doing this. A paper check costs them several dollars to print and mail, many times what an electronic payment costs. And with millions of payments a year, they are done eating that expense. Whether you love the change or not, it is coming. And the smart move is to be ahead of it instead of behind it. Now, there is one more thing I have to tell you because I never want to oversell a rule. There is a narrow waiver. If your situation is genuinely extreme, for example, you live somewhere with no banking access at all, the U.S. Treasury does allow you to request an exception from the electronic requirement. And the number to call to ask about that waiver is 1-877-874-6347. But I want to be honest with you. That waiver is meant for rare hardship cases. It is not a way to keep your paper check because you prefer it. For almost everyone watching, the right and safe move is to get yourself onto direct deposit or the Direct Express card before that paper check stops coming. Do not wait until a payment goes missing to deal with this. Set it up now while it is calm, not after there is a problem. So that is change number 1. And if you only do one thing from this entire video and you or someone you love still gets a paper check, it is this. Get on electronic payment now. That protects the money from ever going missing, which brings me to change number 2. And this one is not about protecting money you already get. It is about going and getting thousands of dollars that you may have no idea is sitting there waiting for you. The second change is a brand new tax deduction created specifically for seniors, and it is worth up to $6,000 per person. This came out of the major federal tax law passed in 2025, the one you may have heard called the One Big Beautiful Bill. Buried inside it is what people are calling the senior bonus deduction, and it is one of the most generous breaks aimed directly at older Americans that I have seen in years. And yet most seniors have never heard the words, which means most seniors are going to leave this money on the table. Let me tell you exactly what it is. If you are 65 or older by the end of the tax year, you may be able to claim an additional deduction of $6,000 on top of your regular standard deduction. And read that carefully. It's $6,000 per eligible person. So if you are a married couple and both of you are 65 or older, that is 2 of these deductions. $12,000 of your income shielded from federal tax on top of everything you already get. For a lot of retired couples, that can be the difference of well over $1,000 back in your pocket. And in plenty of cases, it is the difference between owing the IRS and owing them nothing at all. Let me put a real set of numbers on it, because a deduction can sound abstract until you see what it does. Picture a married couple, both 67, living on Social Security and a modest pension, with a combined income comfortably under that $150,000 line. Both of them qualify. So that is 2 $6,000 deductions, $12,000 of their income that the IRS now simply does not get to tax. $12,000 taxed at their rate is real money, often more than $1,000, sometimes closer to $1,500, that either comes back as a bigger refund or wipes out a bill they would have owed. Now picture a single retiree, 70 years old, living on her Social Security and a small withdrawal from her savings each year, well under the $75,000 line. She gets the full $6,000 shielded all by herself on top of her standard deduction, just for being 65 and knowing to claim it. Neither of those people did anything fancy. They did not move money around. They did not hire anyone. They did not itemize a single thing. They just claimed a deduction they were entitled to. Now, here is what makes this one genuinely easy to use, and I want you to hear it because it removes the excuse most people give themselves. This is an above-the-line deduction. That is a technical phrase, so let me translate it. It means you do not have to itemize to get it. You do not need to dig through shoeboxes of receipts. You do not need to have a mortgage or big charitable gifts or any of the things people think you need to get a real tax break. You can take your normal standard deduction, the simple way most retirees already file, and still stack the $6,000 on top. It is about as close to free money as the tax code ever gets, and it is sitting right there. But, and this is the part you absolutely have to get right, there is an income cutoff, and it is strict. The full $6,000 is for seniors with a modified adjusted gross income up to $75,000 if you are single, or $150,000 if you are married filing jointly. Above those lines, the deduction starts to shrink. It phases out a little for every dollar of income over the threshold, and once a single filer reaches $175,000 or a couple reaches $250,000, it disappears entirely. For most retirees living on Social Security and a modest amount of retirement income, you are comfortably under the line and you get the full amount. But you need to know where that line is, because income from a big one-time withdrawal, say you pulled a large sum out of an IRA this year, can quietly push you over it. And this is exactly where my world as an estate attorney bumps into your taxes. So let me give you the warning I would give a client. The income that counts here is not just your Social Security. It is your retirement account withdrawals, the interest and dividends on your savings, if you sold a property, all of it added together. So if you are planning to take a big distribution from an IRA or sell an asset in a year you are counting on this deduction, that one move can shove your income over the threshold and shrink or erase the very break you were trying to use. The lesson is simple. If you are near that line, think about the timing of your withdrawals before you make them, because spreading a large withdrawal across 2 years instead of taking it all in one can be the difference between keeping the full deduction and losing it. A little planning before December beats a surprise in April every single time. One more eligibility detail that trips people up. If you are married, you generally need to file jointly to claim this, because if you file as married filing separately, you are shut out. So for most couples, filing together is the move that unlocks it. So what is the action here? When you file your federal return on your Form 1040 or the senior version, the 1040SR, this is where that deduction gets claimed. If you use a tax preparer, you say to them directly, "I am 65 or older. I want to make sure you are taking the new senior bonus deduction for me, the $6,000 one from the 2025 law." If you file your own taxes, the software will ask your age and walk you to it, but only if you do not rush past it. And here is the move almost nobody knows about, so listen closely. This deduction is available for tax years 2025 through 2028. If it turns out you already filed a return for a year you qualified and you miss this deduction, you are not necessarily out of luck. You can file an amended return using Form 1040X to go back and claim it, and the IRS can send you the difference. That is real money you can recover from a year that already closed, simply because you now know the deduction exists. Think about what that means. A married couple, both over 65, who never heard of this, could be leaving $12,000 of shielded income on the table every single year for 4 straight years. That is not a rounding error. That is a vacation, a chunk of a property tax bill, months of groceries, real money. And it comes back to you for the price of checking one box correctly. That is change number 2, your refund, which brings us to the third change. And this one is for every single person watching who takes prescription medication, because it puts a hard ceiling on a cost that for some seniors used to have no ceiling at all. The third change is a cap on what you pay out of your own pocket for prescription drugs under Medicare Part D. And I need you to understand how big a deal this is, because for years, the cruelest part of the drug benefit was that there was no real upper limit. If you had a serious illness, an expensive medication, a cancer drug, the kind of prescription that runs thousands of dollars, you could end up paying and paying with no end in sight year after year. That is the thing that has now changed. Here is the number. Starting in 2025, federal law put a $2,000 cap on what you pay out of pocket for covered prescription drugs under Part D in a year. And because the law adjusts that number for inflation, for 2026, the cap rises to $2,100. So, here is what that means in real life. Once your out-of-pocket spending on your covered Part D medications adds up to that $2,100 limit in 2026, you are done paying for the rest of the year. Your plan picks up 100% of the cost of your covered drugs after that. Not a smaller share, all of it. For someone on a $500 a month medication, that is the difference between $6,000 a year and $2,100 a year, and then nothing. That is thousands of dollars of protection for the seniors who are the sickest and the most squeezed. Let me show you how this plays out over a real year, because the timing of it is the part that surprises people in the best way. Say you take an expensive medication, the kind of specialty drug that runs you several $100s every time you fill it. In the old days, you paid that every month all year with no finish line. Under this cap, you pay as you go at the start of the year, and your out-of-pocket spending climbs toward that $2,100 ceiling. For a lot of seriously ill seniors, that means you hit the cap somewhere in the spring. And from the moment you hit it, every covered prescription for the rest of that year, from spring all the way through December, costs you nothing at the pharmacy counter. Think about what that does for a family that was rationing pills, splitting tablets, skipping doses because they could not afford the refill. It means they can actually take the medicine their doctor prescribed. This is one of the most meaningful financial protections for sick seniors to come along in a very long time, and most people still do not know the ceiling is there. Now, let me tell you exactly what counts toward that cap, because people get confused here. The $2,100 is what you actually pay out of pocket for your covered drugs, your deductible, your co-pays, your co-insurance. All of it adds up toward that ceiling. What does not count is your monthly premium, the amount you pay just to have the plan. That is separate and it keeps going. But every dollar you hand the pharmacy for a covered medication is a dollar climbing toward that cap. And once you reach it, the meter stops for the year. And here is the action, the part that turns this from a nice fact into money in your pocket, especially if your income is limited. There is a federal program run through Social Security called Extra Help, sometimes called the Low Income Subsidy. Extra Help is designed for seniors with limited income and savings, and it can dramatically lower what you pay for Part D, your premiums, your deductible, and your co-pays on top of that cap. A lot of seniors who qualify for Extra Help never apply because they assume they make too much, or they never heard of it. Do not assume. The income limits are more generous than people think, and the savings can run into the thousands of dollars a year. You apply for Extra Help directly through Social Security. You can do it online at the Social Security website or by calling Social Security, and the application is the form SSA-1020. If money is tight and you are on Medicare drug coverage, that one application is one of the highest value phone calls you can make this year. And let me push back on the reason most people give for not applying, because I hear it constantly. They say, "I am sure I make too much to qualify, so why bother?" Stop right there. The income and asset limits for Extra Help are more generous than almost anyone assumes, and they have been expanded in recent years so that more seniors qualify for the full benefit than ever before. People who were turned down years ago can qualify now. People who never applied because a neighbor told them not to bother are leaving real money on the table. The only way to know for certain is to apply and let Social Security run your numbers, and it costs you nothing to find out. If you qualify, Extra Help can knock down your premium, your deductible, and your copays so far that your medicine becomes nearly free. And that stacks right on top of the cap we just talked about. So, if you take prescriptions and your income is anything short of comfortable, treat that application as one of the most important things you do this year, not a maybe. So before I wrap up and give you the one move I want you to make today, let me take a quick moment because so many of you have asked me to put all of these in one place. Every video I cover a piece of this. One rule, one form, one program. And the message I get the most is, "Walter, where is the rest of it? I do not want to miss the next one." So I built it. It is a plain English guide called the Senior Money Playbook. It walks through the moves I cover on this channel, the Social Security traps, the property tax breaks, the bank protections, the deductions like the one we just talked about, each one with the exact steps written for people over 65 and readable on any phone or tablet. If you want every one of these in a single place instead of hunting them down one video at a time, the link to the Senior Money Playbook is down in the description below. All right, let me bring all three of these home because I do not want you to nod along and then let them slip away like every other thing nobody told you about. Here is the bottom line, and here is your one move for each. Change one. The paper Social Security check is ending. So if you or anyone you love still gets a paper check, get on to direct deposit or the Direct Express card now before a payment ever goes missing. Change two. The new $6,000 senior bonus deduction is real, and most people will never claim it. So when you file, make sure you or your preparer takes it. And if you missed it on a return you already filed, amend it with Form 1040X and get that money back. Change 3. Your out-of-pocket drug costs are now capped at $2,100 for 2026. And if your income is limited, apply for Extra Help through Social Security to push that cost down even further. 3 changes: your deposit, your refund, your prescriptions, all happening right now. all sitting there waiting for the people who actually take the step. The seniors who hear this and act are going to keep thousands of dollars that the ones who never heard it are going to lose. Let us make sure you are in the first group. This is general education, not legal or tax advice for your specific situation. So confirm your own numbers with Social Security, with the IRS, or with a trusted advisor before you act. But do not let that stop you from making the call, because the people who do nothing are the ones who lose. If this helped you, share it with one person over 65 who needs to hear it. There is a very good chance no one has ever told them any of this. Subscribe because I break down a new one of these every week, and I will see you in the next one.